Cashflow Diary Podcast, episode 177.
Welcome to yet another exciting episode of the Cashflow Diary Podcast, the podcast that teaches you insider tips, tactics, and strategies for creating leverage streams of cash flow into your life. Learn from top-performing entrepreneurs, business owners, investors, and thought leaders from across the globe as they share their secrets to success. Like what you learn on this and other Cashflow Diary podcast episodes? Go to learninvestingnow.com and sign up to receive powerful tips and information that will help you succeed as an entrepreneur and investor. Now, here's your host, investor, entrepreneur, business owner, educator, speaker, author, and master facilitator of Robert Kiyosaki's cash flow game, Jay Massey.
All right, ladies and gentlemen, welcome to another episode of the Cashflow Diary Podcast. I am your host, Jay Massey, and I'm glad that you're here today because you are going to get a different taste of cash flow from a completely different angle than we have ever covered, and I think you're going to like it. Many of you, you've known about this for a long time, or at least you know of it. You have the idea that something like this could happen, but you might not have met a person who actually does it. We talk all the time about, building a piece of real estate, turning it into a house or a shopping center, cell phone tower, all these things to produce cash flow. Yes, absolutely. Makes perfect sense. Well, have you ever thought about a piece of online real estate, possibly, maybe even a website as the means to your cash flow? Today's guest is an expert in this area and has the ability to buy and sell online businesses. Go figure. You don't necessarily have to buy a piece of real estate. You could do the virtual digital real estate. He does that for a living. Our guest today is none other than Jock Purtle. He's the CEO of Digital Exits. This is a full service website brokerage. They help online businesses and owners find a buyer when they want to exit their company. Many owners, many CEOs, many entrepreneurs build themselves into a corner, can't find a way out, but Jock can make sure that happens for you. So let's find out what it takes to find these businesses, build them, and create cash flow online as it goes. Help me welcome Jock Purtle. Jock, you there?
Probably one of the best introductions I've ever had, Jay Massey.
Thank you very much. Thank you very much. Glad that you are here today. I'm going to start off with our normal first question. I tend to look at today's entrepreneurs. Of course, you are one of them. Today's entrepreneurs are a lot like yesterday's superheroes. And, in the US, we have superheroes like, Batman, Robin, Wonder Woman, the Hulk, superheroes. And I think entrepreneurs are kind of the same. Occasionally we get dressed up. We may put on a mask from time to time, but we use our special gifts and talents to go and help people in various ways. So just like a superhero, entrepreneurs have an origin story. They have a beginning. Before the Hulk was, the Hulk, he was just a lab rat, for lack of a better way of putting it. Before, Spider-Man was Spider-Man, he was, Peter Parker. What I want to know is before you were out there doing and selling businesses ranging from $100,000 to $500,000, before you were doing that, or who is Jock Purtle?
Sure. I don't think there was anything beforehand because I was an entrepreneur. From there, like a kid. So I think it's always been in my blood. And I had the benefit of working in the family business from the age of 9. So I kind of don't know anything else. I did have a job at KPMG, which is an accounting firm, which lasted for 6 months, and I ended up getting fired from that. And it's probably a true testament to the fact that I am an entrepreneur at the core. But quick background, I've worked in the family business. The family business was a real estate agency and a valuation company. So I've been doing, business valuations since I was a teenager. Hence the whole buying and selling businesses aspect.
Yeah.
That's a story in itself, but, just assume that I got an education by fire doing it rather than learning it. Bought bought my first online business in 2009, borrowed some money from dad, had some money on my own, sort of scrapped it all together, bought that business, did it up, ran it for 9 or 10 months, and then resold it for a profit. That was kind of like my introduction to the whole concept of buying and selling web businesses, or you could call them virtual real estate, just depending on sort of how big the business is. And then, bought and sold, a couple of businesses, and then started the brokerage in 2011. And then here we are today in 2015. I run the brokerage. I own a couple of properties myself, and we're on the path to put together some capital to go and sort of scale up that process at the moment. And then that's a quick background on me.
That's awesome. And some of you probably have picked up on the fact that sounds similar to fixing and flipping, especially that first transactions. It sounds like you bought a website in '09, and when you say you did it up, I'm assuming that meant you improved it in some way?
Yeah, so the fundamentals of fixing up a web property is getting more traffic to that property, converting that traffic at a higher rate into customers, decreasing your costs of operations, and then all of those three things combined should give you a higher profit.
That, and what I love about that is how similar that is to everything that we do in the real estate space, or any business for that matter. It's just done online. So give us an idea. How did you just wake up one day and say, I know, I'll buy an online business? Is that literally how it happened, or was there what led up to that thought process?
So, I've done a lot of these interviews, and I really can't remember what the tipping point was, whether it was talking to someone or I read an article, or I don't remember what was the idea, but I do remember what the process was after I figured out that idea.
Okay.
And so I probably spent maybe 9 to 12 months on a learning binge. There's a couple of forums. There's a forum called experiencedpeople.net that is all about buying and selling web businesses. So obviously got involved in that. And then through that, met a whole bunch of people doing the similar thing, learned from them. However, I had a background of arbitrage in terms of buy and sell. So, I've sold garden plants, I've sold furniture, I've sold toys, I've just bought stuff low and sold it high. So in that respect, I already had the skill set of identifying an undervalued asset. And so through the combination of learning about buying and selling web businesses, and then looking at the market and looking at, probably hundreds of deals. Took me 9 months before I pulled the trigger on the first deal that I did. Between all that, that's kind of like the combination of how it happened.
Now, you said it took you 9 months. Is that 9 months because you needed that much information, or what?
No, just find the right deal.
Got it. So there was an element of patience in that 9 months.
Yeah.
Got it. Excellent. So give us an idea, typically in this particular business, if you how would I find, if I'm you just Google undervalued website? I mean, what are you going to do? How does one look for such a thing, or what does it look like? I mean, I know what a dilapidated building looks like in the right neighborhood, that makes me go, yeah, this might be one. How can you identify something that might have a problem or become a target for acquisition?
If I was fresh to it, I'd go to the brokers and start looking at their listings, just the same as you would go to a real estate agent and look what they've got for sale. That's kind of the step one. And then once you start to see, a couple of dozen deals, you start to recognize trends and patterns. And through talking through to the brokers and to the sellers, and then understanding more of how the nuts and bolts of the business works, you're going to be able to identify, where there's an undervalued well, I was going to say section, but just an undervalued opportunity in a deal. And so, from my point of view, the biggest undervalued element of a web business is improving the conversion rate from like eyeballs to customers. I think that's the biggest win that you can have as quickly as possible. The second thing in terms of win is improving the traffic, so getting more visitors to the site. And then the third thing that you might want to look at is improving margins on the product or margins on the expenses, etc. And maybe we might throw in there increasing the lifetime value of the customer as well. So like the basics of marketing, get more people, convert them better, or increase the amount of times that they buy.
Indeed. I like the increased the amount of times they buy part, because that's the subscription or real estate model, and that's how I tend to look at it. Is there a particular type of website that works better for this? Like if it's a membership website, I mean, I'm assuming you can do this with particularly, here's the better way of asking. What type of website can you not do this with?
You can do with anything. So let me give you the spectrum of what types of business models you can buy. There's e-commerce businesses that sell product. There's software businesses that sell software. There's advertising websites that sell advertising placements. There's forums. There's membership websites. There's subscription businesses, which is kind of the same thing as a membership site. And there's apps. So those are the main types of web-based business models out there.
Now, but okay, so how much, I'm not an app guy. That doesn't mean I can't own an app. So do I have to have like a background in that particular field in order to, how does that typically work? Because a website in my head is not, it's just somehow different in terms of, who's the wizard behind the curtain, so to speak.
Certainly some affiliation or understanding of the business model or the product would help. But, my first business that I bought was an advertising website that talked about school grants in the US. And at the time I was in Australia and I had no idea first of all, I thought school was high school, which I came to figure out it's actually college. But, so there's number one. Purely, I just looked at the business from a financial deal point in terms of, all right, this is an undervalued asset that I can buy. And then, if I can improve the traffic to the site, then I can make more money. Like it might help, but I don't think it's needed is probably the answer to your question.
Got it. So this is something more than just buying a domain name and selling that domain name for more later.
Yes, there's a lot more. It's essentially a business. It's probably got some employees or subcontractors. It's more of a business than an asset. However, there are, let's take an advertising website, for example. There's not a lot of moving parts other than maybe throwing up a bit of content on a regular basis to that asset per se. The advertising you might use, for example, a product called Google AdSense, and you can place the ads on your site using their platform, and then they just cut you a check every 2 weeks. And then you might get to something like a B2B software business where you've got 10 staff and 2 sales reps and a couple of programmers and all of that moving parts. Now that's still a web business. It's just there's more attention required on the day-to-day.
Got it. So if I was looking at one of these, what's one of the easiest ones to cut your teeth on? Say you wanted something that after you purchased, you had as little to do as humanly possible. What does that typically look like?
So it's probably either an ad-based business or a drop-ship e-commerce business.
Drop
ship. So drop ship means that the website is essentially the salesman, and then once someone buys a product through the website, the order gets sent to the manufacturer, and the manufacturer ships that product with your label on it to the customer.
Oh, that sounds cool.
Yeah, so all you have to do is set up the system that talks to the manufacturer of the product, and they'll ship it and worry about all that good stuff. So all you have to do is manage customer service on the front end and make sure the system doesn't break.
Yeah, make sure it doesn't break, which is code for it's going to break, so pay attention at some point in time.
Yeah, you're going to need someone to manage all the tech element of it. But, it doesn't cost very much to hire someone on a part-time basis that's working as a subcontractor.
Well, okay, so since we're talking about cost, what typically say? Let's keep it these simple ones at the beginning. What would the advertising and or dropship type of website typically go for in today's market?
As in evaluation, or as in terms of what it costs to run it?
I was actually first going to ask the valuations, then I was going to ask operating expense ratios later. But yes.
Gotcha. Well, let's do both at the same time. So an ad-based business is probably going to be like 60 to 80% margin, and valuation 2 to 3x, depending on the size of the business. So that's a 50 to 33% return on investment, assuming that you don't count the time that you invest as the owner into the expenses.
Right.
If you did, it would be recalculated. And then a dropship store might be like 10 to 20% margin. And then that's probably like 1.5 to 2.5x.
Now, I have an understanding of what that X means, but you could help everybody to understand what is the 2 to 3x, the 1.5 to 2.5x, etc. What does that X mean?
You've got an e-commerce store and it sells pot plants, and the profit on that business is $100,000 for the last 12 months. So 1.5 to 2.5x is the multiple that the market is paying for those assets. So that means the selling price is $150,000 to $250,000, and then, your payback period for that is 1.5 to 2.5 years, and then if we do the calculations on yield, then what's that? So I'm trying to do the maths in my head. It's probably like a 40% return on 2.5x, and then it's an 80% return on 1.5x.
That sounds right to me.
Yeah, something like that.
It's close enough.
Give or take a couple of percentage points. It's high yield. However, there is higher risk to the business.
Okay. So is it possible, for example, I know with real estate, we have the opportunity to insure against a lot of things. How do we hedge those downside risks?
So you hedge the downside risk by paying less. There's, unfortunately, from a financing standpoint, the bank isn't going to lend against the asset because most of it is technically goodwill. There's no hard, tangible asset. So you're not going to get bank financing for the business, but you will get seller financing in most cases. In terms of insurance, I have no idea whether you can insure a web business. I'm going to assume no, for that same reason, that there's no tangible resaleable asset behind it. So that's why the price that you pay for the asset is a lot lower in terms of a yield standpoint than real estate. However, the upside is, if you can handle the risk, you can you can make a lot of cash.
Yeah, that's what I'm hearing exactly. And it sounds as though this could work for anyone who might have, the desire to still keep a full-time job or even eventually make this their full-time job. Speaking, what is the minimum entry point you've seen someone buy one of these for?
You can buy a web business for $10,000.
Oh, that's not going to make very much, is it?
It's probably making $500 to $1,000 a month, roughly.
Interesting.
Which, for some people, it's an extra $500,000 a month. I'm not discounting that. We generally don't list businesses under the 100 grand mark. So they're probably making, I don't know, 5 grand a month at least in profit. But yeah, if you had sort of 50 grand, that would probably be a half decent starting point. Just from a sort of buyer/broker standpoint, I think that the larger and older the business, the less risk there is. Obviously, the market's going to pay a higher price for that. Generally something that's 50 grand, it's quite young. You're not going to get a 10-year-old asset that's consistently been throwing off 50 grand a year for the last 10 years for $50,000, for example. So yeah, you just got to weigh up what you want to do in terms of, taking the first leap and then risk reward.
Taking the first leap, that brings up two things. One, is there a licensing process? Because you keep using the term broker, and I'm just curious if there is a licensing process for any broker. I mean, how am I, outside of talking to you, don't get me wrong, you're awesome, but you're saying that there's a lot of you out there. How does anyone know if they're dealing with the right guy or gal?
So the SEC released a relinquency, whatever that word is, on M&A transactions where it's a private deal and the assets of a business are traded. And so the license that you would have to get is a broker-dealer license through the SEC because of the fact that we're only selling the assets of a business. There's actually no requirement for a license. Now, who do you trust? I don't really have the answer to that. I guess probably track record, time in business. Obviously, broker, as a broker, it's all relationship based. So if you've got a whole bunch of bad reviews, you would probably stick clear of that broker. I would ask for references on past deals that they've done. I just basically do the background research. There's no, even if you were licensed, still doesn't mean you're a crook. I mean, still doesn't mean you're not a crook, if that makes sense.
Yeah, I understand what you're saying. Now, in the real estate world, there's like a standard commission. Is that same thing exist?
No. So because technically this market is unregulated. Even a business broker market is unregulated. Like a business broker can charge whatever the hell they want if they're selling, mum and pop fish shop down the street. It's just whatever they negotiate. However, from a seller standpoint, the average would be 10%, and then it would be, higher or lower, really depending on the size of the business and whatever was negotiated.
And that's 10% of the purchase price, not like.
Correct.
Okay.
Now that gets paid by the seller. So let's say we sell a business for $300,000. Our commission for that deal is 30 grand, and the buyer pays 300. We take our spread on the way through, and then the seller pockets 270.
Got it. Makes perfect sense. Now, before you get to that point of the final transaction, and again, I'm assuming there's a due diligence process of some kind. Just not sure how one would do that.
So there's actually a service out there called Centurica.com that assists with in due diligence. Like it's a company that helps with due diligence on web properties.
That's awesome.
So that would be step one. Step two would be read the massive, long 10,000, 5,000 word guides on my website that talk about due diligence and all that good stuff. You might want to look at that. But from a due diligence standpoint, you want to verify a couple of things. Firstly, reconciliation of the financials. So if they're claiming to me making $50,000 a month in revenue, you want to check out the merchant account, the payment processor, all of that, all of the, are they making as much money as they are? And then you want to check bank statements, etc. So there's a financial reconciliation / audit. That's probably number one. Second thing is traffic audit, meaning Google Analytics. Go and Google all this stuff if you have no idea what I'm talking about. So checking out Google Analytics, making sure that the sources of traffic are legitimate and that they're not, buying eyeballs or visitors and, pumping up the pig per se to sell it at market to make it look better. I would look at the legal standpoint in terms of, the deal, the seller, all that good stuff. I would also look at the supplier side of things in terms of the relationships, the terms, and then you'd look at the employee contracts and all that good stuff. So that's sort of a broad stroke on the categories that you should be looking at. There's obviously more detail to be gone into for the due diligence process. However, there's quite a bit of information out there on the web that you can go and hunt down and have a read of.
Yep. So what's the typical time frame? Like if someone said today, all right, Jock, I want to buy a business, and they could at least decide which one, and they were ready to go and enter into contract, how long does a typical transaction take before it actually closes? Okay, so I know you are enjoying this because at least I am. If you didn't, I did. At the end of the day, we're talking about a different way of creating cash flow. And man, I'm loving the creativity that's involved. I'm loving the fact that anyone can do this thing. And you're going to get to hear how long a deal takes in just a second. But before we get there, I just want to make sure that everyone remembers that you need to go to Star, Rate, and Review. Star, Rate, and Review the podcast. You can go over to cashflowdiarypodcast.com. Again, cashflowdiarypodcast.com is going to take you straight to where you can star, rate, and review so that you can be entered into the drawing. And today is the day that we do the drawing. Today's winner will receive a copy of the Cash Flow board game by Robert Kiyosaki. So you can go out there and learn some of these principles, put them out there so that you can earn as well. Again, if you want to enter, all you have to do is star, rate, and review. Remember, the written review allows me to see your username. And then on Mondays, we're going to be telling you who the winner is. So long as you got your written username there, I'll be able to let you know. So with no further ado, today's winner is Cytopia. 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 Send us an email over to info@cashflowdiary.com so that we can make sure to get your mailing address, etc., and get you a copy of the Cash Flow game. You only need to enter once, and you are forever entered in anything that we give away this way, so that way you have the opportunity to do so. Now, with that being said, one of the things that I always want to remind you guys is that when you're out there building your streams of income, build more than one. Get one done, sure, then build another. And then when that's done, build another. When that's done, build another. Diversification between asset classes, real estate and business, and online and offline, all of these things can make sure that if something happens in the future for you, it doesn't all go away. Now, let's listen as Jock decides to tell us and inform us some more on how long a deal can actually take.
3 weeks to 4 months, depending on the size of the deal. We've got one deal in the process at the moment for $400,000, and that's by the time we opened up due diligence to close, it's going to be about 4 weeks. We've also got another deal in the pipeline that's $2.5 million in valuation, and that's taken, by the time we listed the business last November, and we're like a week away from ending due diligence. So, depending on the size of the deal and the complexity, smaller the deal, less time, bigger the deal, more time. Use that as a rule of thumb.
Got it. Makes perfect sense to me. So someone, just in the same way that many of us may collect apartment buildings or single family houses or, what have you, we could collect a portfolio of digital properties, it sounds like.
Correct.
And I'm assuming some of your customers, that's like what they do?
A lot of the internet entrepreneurs do that. A lot of the larger media companies do that. A lot of people just buy one business and focus on that. It's kind of like, let me give you a real estate analogy. It's like, do you want to buy, 20 single home, houses, or do you want to buy 200 complex apartment building and just have that as your one asset? It's just really dependent on your strategy and your risk tolerance.
So when you say strategy, part of what comes to my mind is the resellability of the actual, property. I'm assuming what you're also saying then, outside of just the, buying something that's broken and fixing it and reselling it, there's also a market for maybe buying something, holding it a while, and just selling it again?
There is. However, because there's such high yields, a lot of people just hold on to their assets. And so the churn on resale is quite low, probably under 20%.
Wow.
However, that being said, there are people out there that's purely their business model, but you need to hold on to a property for at least a year, if not 18 months, before you can resell it.
Is that
Purely,
because
I was going to explain. It's just because of confidence from the new buyer. Like, I bought something last month, and then you're selling it the next month. You'd be like, what's wrong with a business?
Right.
It's a little bit more complex than a bit of property where, you can, last month, it was a block of land, and this month it's a block of land. Like, there's no moving parts to it. Whereas last month you've got a business, this month you've got a business with, hundreds of moving parts. To be like, the buyer's going to be like, mentally, what's changed? Like, have they found something in the market that's coming ahead that they know of? So, that's the reason why the time period between resale is a lot lower.
That's interesting. That would also create an opportunity, for lack of a better, term. I tend to think in real estate words, but for a new construction market. So if you could build a new website and sell it, build and sell and build them, sell them, wouldn't it?
There's always the question of buy versus build. And that's an investment question that, a lot of private equity guys and a lot of, business owners do is, should I buy a business or should I just start one? Like, what's the quickest path to a return on investment? The challenge with web business is, it takes a lot of hard work to get it off the ground. It's a lot easier to take a business from 1 million to 5 million than it is from 0 to 1. Like, a hell of a lot harder. And so, so it's a momentum challenge, meaning, can you take 5 new businesses and grow them? Or is it easier to buy something that's existing and use the existing momentum and keep pushing it forward?
Yeah, well, I was, and while that's true, I was more thinking about, for the person who likes the idea that you're putting forth right now, I'm trying to figure out how they can get in on the game, so to speak. It's like, if I didn't have the cash and what I could
Here's how you do it, all right? Yeah. You become the operator and you find someone with the cash and be like, listen, you've got the money. I haven't got it. I've got the time. You buy it. We'll split whatever equity percentage in the business. I'll run it, and then I'll take a wage and take some points in equity. That's how I would structure it.
That's awesome.
Just do the same as real estate. I think you were about to say exactly that.
Yeah, that's exactly right. I was like, oh, okay. Well, if you didn't say it functioned that way, that's easy. That makes total sense to me. And I like how many similarities there are to this one. So for example, in your inventory, so to speak, that's interesting. How do you let people know that? How can anyone find out if something's for sale? There's not like really an open house.
There is. Well, there technically is. Like, every business that we've got for sale at the moment is technically an open house. Like, we send you all the financials and the FAQ and traffic stats and all that good stuff. So that's essentially like an open house. All the listings that brokers have is an open house.
Interesting.
However, if you want to find a private deal, then it's, go door knocking, get on the phone, send some emails.
I'm guessing the private deal is where it's at, is what you're also trying to tell me.
Well, here's the thing. The private deal is where it's at, but the time it takes to find the awesome deal is just, it takes a bunch of time. A lot of time, a lot of energy, a lot of resources.
Yeah. Got it. Completely, totally understood. So is it common then for a person who's shopping for a business, for lack of a better way of putting it, to look at like 10, 20, or do most people, because it sounds like if they're not reselling, I'm trying to figure out how the inventory and volume is. It's like, it doesn't seem like there would be a lot to choose from.
That's the biggest challenge for us as a business, is finding good businesses to sell. There's a lot of crappy websites out there that people threw up that thought was a great idea, but it makes no money, right? And so our challenge is finding, that good quality business where the owner is reasonable in terms of their expectations and selling price and motivated to sell.
Yeah, motivated to sell, because it sounds like the good ones would have a system and would have very little reason to actually sell it.
Exactly. So that's the challenge with web businesses, is there's a whole lot more buyers than there is sellers.
Well, that would it would seem then that there would be the multiple would be higher.
Yes and no. It's more the fact that the market will pay what the market will pay, but the closing time is a whole lunch quicker, and the cash paid for the business is a whole lot more. So let's take a deal that we've got at the moment, which is like an image hosting business. It does 675 in profit. That's $675,000, and the asking price is 2 times at 1.35. So you got multiple offers on the table. Some of them are financed by some of them are trying to get bank financing. Some of them, that by the way, that's against their own property and assets, not against the business.
Yeah, you knew I was going to ask that.
Yeah, yeah. So the bank's going to lend against the other assets that they own to give them the cash to buy the business. So it's one type of offer. Another type of offer is cash and seller financing and earn out. And there's just different variances of the amount of cash up front. And so the reason that the multiples don't change very much is there's still that risk element there. It's just the time to closing. Like you could get a restaurant based in Torrance in California that might sit on the market for 6 months. But you might get a web business that sells, pizza frying pans or whatever throughout the US, and they could sit on the market for a week. So that's the difference in terms of, is a hot market, a lot of buyers, stuff gets taken off the market really quickly.
Got it. So if someone wanted to, and I'm thinking about this because for those of you who don't know, I met Jock originally in Lithuania. We were hanging out at Simon Black's entrepreneurship camp. And as I think about the idea of diversifying income, say from the home country, this seems like would be an easy way to do that. Or am I mistaken?
Yeah, 100%.
Yeah.
It's just that no one, it's just an asset class that, first of all, not many people know about. Second of all, there's a level of technical knowledge required to run these businesses, so it scares off, certain portion of the investment community.
Well, okay, so let's talk about that because you're right, there's definitely a level of technical, but the same thing is true in real estate. Now, one of the things I do, especially the larger properties, is we negotiate for management to stay on board. Does that ever happen?
Yes. In the larger deals, sure. We've got an e-commerce business at the moment where the operator, who is also the owner, would be happy to stay on and, take a wage and maybe take a couple of points in the newly structured LLC. It really depends deal on deal. Sometimes the acquiring company wants to bring in their own management and boot the existing management out. So,
right.
On a smaller deal, maybe like up to $500,000, it's generally going to be owner operated. So the person buying will come in and become the operator. But on the larger deals, like $1 million to $5 million, it's throwing off enough cash that you can hire an operator to run the business. And when I say an operator, I mean like a CEO or general manager or whatever you want to call it.
Yeah.
So the answer to that question is yes. On the larger deals, the management can stay in place. Just really depends on who the acquirer is and what their team what the team is that's backing them up, what skills they have and all that good stuff.
Well, that's kind of neat. I mean, I like how similar it is because it's a world when you can relate it to real estate, I can understand it. I just, you don't always look at it. I mean, I'm just on a website, in general. I don't really think about the fact that there's a business behind what I'm looking at, in the sense of I could just buy that, item or what have you. So on a typical, day, give us a sense of how big is the market for retrading these types of businesses, like on an annual basis? What would you say?
Yeah, so we do a white paper every year where we analyze all of the public transactions, and last year it was 180 million in public transactions. So I'm guessing that the sub $5 million market might be probably 300 to 500 million as a guess, including both private and public transactions.
So when you say public transactions, is there like an MLS type of thing?
What's MLS?
Oh, sorry. Multiple listing service. It's where if I'm going to sell a property, there's a reciprocal agreement between a number of different brokers. They all put them on the same website or exchange so
Right.
that any other broker can see what they have for sale.
Yeah, so the data is coming from the business for sale classified websites like BizQuest and BizBuySell and businessforsale.com. So it's essentially either a private individual or a broker listing the business for sale there.
Got it. So I guess then if I'm sitting at home right now thinking that I might want to dip my toe in the water on this whole buying an online business thing, because I mean, if you can have them for as little as $10,000, that's in the reach of nearly everyone listening right now. What would be like, how do I get prepared to do that? Walk me through what the typical first time buyer should know or do before they contact you.
If I was a brand new buyer, I'd type into Google website broker and then get on the database of all of the brokers in the marketplace. I would also go to bizbuysell.com and then get on the Internet Business for Sale section database. And then I'd start looking at businesses. I'd start looking at prospectuses. I'd start looking at markets. I'd start looking at financials. I just start doing my research and getting a feel for what's out there in terms of potential. And after you looked at 50 or 100 deals, then you're going to get an idea of, all right, I like this business model. I like e-commerce. It suits me well. And so then you kind of figure out, all right, I like e-commerce. What type of markets do I want to play in? What type of markets am I not really passionate about? And so once you've sort of narrowed down your search, then you can start to look for businesses that specifically meet that criteria. And I would also start hunting privately, emailing webmasters, all the above in that market. Be like, hey, I've got some cash. I'm looking to buy a business that's similar to yours. Are you interested in selling? And so I'd use both the public and private domain to go and find a business.
So that I'm clear, when you say market, because when you say market to a real estate guy, I start thinking about, do I want something in Virginia or Texas? But do you mean business model, like e-commerce versus subscription model? Or do you mean, yes. That's what you mean. Okay. Got it. So whether it's an e-commerce site that does hair products or an e-commerce site that does dog food, in your world, it still is just an e-commerce site. That's the market, what you mean.
Correct.
So
I really can't remember when I put the word market in there. So you got two decisions. You've got business model, and then you've got niche. All right, let's supplement the word market with niche. Sorry, I'll give you the American version. Niche.
Yes, thank you. We do struggle from time to time with the language. Thank you. So I guess and let's take it to the other side. What if I was, say I own a web property right now, and I'm like, okay, well, maybe Jock, can help me. I can finally find my way out, from under this web property. What do I need to do to get ready for sale, or before I contact you in some way, shape, or form?
On the seller side?
Yeah.
Sell when growing, fix up your financials, get a bookkeeper, cut any dead weight in terms of staff or expenses. Maybe go back to the fundamental of have a decent business. Not being rude, except we get a whole bunch of crap that, people are like, value my company, it's worth $1 billion. I'm like, it made $1,000 in the last 3 years. It's not worth diddly squat. What else? It just comes down to A, having a good business, and then just B, having all of your documentation ready to sell, and then sell at an upswing rather than a downswing, because you're going to make more money. Those would be the three main things. Got
it. Well, for those who have been intrigued, I think a number of people listening to me know that I am intrigued by what you've shared. What would be the best way for us to track you down, and if so, inquire about how to take some of our next steps?
For those that are chasing some information, just go to digitalexits.com. We've got a podcast and a blog and a whole bunch of reports and white papers, and there's a lot of words on that site. So read through that, and then there's a contact form if anyone wants to shoot me an email.
Awesome. Excellent. Now, one final question. If there's someone right now, let's pretend for a second that someone right now is out there, they're looking at putting their, superhero outfit on for the first time. They want to become the entrepreneur. They're ready to pick out their cape. They think this is their year. This is the time that they're going to make something happen. But they're still feeling, a little trepidation. They just got a little bit of hesitation. Maybe they're just not sure. But they feel it in their bones. They're having a tough time keeping jobs or something of that nature. They just don't want to be there anymore. What would you say to that person who's having trouble taking the leap?
A good question. I think probably number one is people don't take the leap through lack of understanding. So I would get knowledged up, if that's even a phrase, on the asset class that you're looking to invest in. And I would also try and find someone that's done it before so they can help you or hold your hand through the process.
Yep. I like it 100%. Well, Jock, I just want to say I thank you for taking the time to share with us something, again, completely unique and another way to build cash flow.
No worries. Was a lot of fun.
All right, ladies and gentlemen, you know what time it is. It's time for you to move at the speed of instruction. You know you were interested in something that he shared today. So why don't you go on over to digitalexis.com and begin that research process. Find that business model. Find that niche that's going to make sense for you, and take some measurable action towards it. Fill out the contact form, write an offer on something, put the money together, figure it out. Because that was some serious cash flow we were talking about today. Anyway, it was fun talking to you guys today. I look forward to talking to you soon. Until next time.